Welcome to The Explainer. Today we're doing something a little different. We're going to deconstruct a fascinating case study in wealth, strategy, and marketing, and it's all based on the actual materials for a very real, very exclusive investment deal. So, let's just jump right in with a big question. How in the world do you sell something for $5 million, but you're only looking for 2 buyers on the entire planet? This isn't just about money, it's about a masterclass in strategy, and we're going to unpack exactly how they pull it off. You know, this one line from their own pitch deck says it all. Invest in generations, not just dividends. Right there, that tells you everything. This isn't your typical stock or bond deal. It's about building something that lasts, something for the long haul. All right, so here's how we're going to break this down. First, we'll look at the offer itself, then the numbers, the crazy tax advantages, the lifestyle perks, how you even find these investors, and finally, what we can all learn from their playbook. Okay, first things first, Section 1, the offer. So what exactly are we talking about here for $5 million?
At the heart of it all is a 33% stake in this place, a debt-free luxury equestrian resort. It's a 41-acre spot called Rocky Ledge Equestrian Resort, right up in Northern California. And it's not just anywhere, it's near Burney Falls, which Teddy Roosevelt apparently called the 8th wonder of the world. So yeah, prime location.
And this isn't just, an empty plot of land. It's a whole operation. We're talking 8 private resort homes, a big 5,000 square foot event center, and you can literally walk right into a national forest and onto the Pacific Crest Trail. It's all designed for things like weddings, big corporate retreats, that whole high-end events market. And get this, only 2 spots for 2 families are even available. That's it. All right, so that's the what. Now for the how. Let's get into the financial blueprint and see how the numbers actually work to make this thing tick. So, the magic number? $5 million. That's the price of admission for one family to get their 1/3 ownership. But, and this is smart, you don't just write a check for $5 million on day one. It's staged out. You put $1 million down to close the deal, and then another $1 million each quarter for a year. So it spreads that big commitment out, which is a really nice touch. Now, here's maybe the most important part of the financial structure. They call it screw-up proof for your heirs. And what that really means is no debt, no mortgage, no surprise cash calls where they ask for more money, ever. The whole thing is built with the partner's money, which just takes a huge amount of risk off the table. And this chart really drives home why being debt-free is such a game changer. Look at that. Rocky Ledge only needs to be booked about 10% of the time to break even. We're talking just over 5 weeks a year. Now compare that to a typical project with a big bank loan. They're usually scrambling to hit 50 or 60% occupancy just to keep the lights on. It's a totally different level of financial security. Okay, so the numbers are solid. But now we get to the real secret sauce, the thing that takes this from a good deal to an incredible one for a certain type of buyer. Let's talk about the unfair tax advantage. The big one here is something called 100% bonus depreciation. It's a real thing in the tax code, and it's super powerful. Basically, it allows a business to write off the full cost of certain assets right away, in year 1, instead of a little bit at a time over many years. For this deal, it means an investor could potentially deduct their entire $5 million investment from their income immediately. And the way they explain it in their own pitch is just brilliant. They say it's like buying $5 million in casino chips, getting all that cash back from the IRS and tax savings, and then you still get to own the casino and split the profits forever. I mean, think about that. You could end up with a net cost of 0 on the deal, but you own a multi-million-dollar asset for life.
And it doesn't stop with that big year 1 deduction. There's a whole bunch of other long-term tax goodies baked in. The income is passive, so it just flows through. Property taxes in California get locked in low for life because of Prop 13. And the whole thing is structured so that when it passes to your kids, they can avoid a lot of the usual headaches like probate and big capital gains taxes.
So, okay, the financial engineering is genius, but this deal isn't just about the numbers on a spreadsheet. It's also selling a lifestyle, a legacy. And the best part? The perks start on day 1. Yeah, you don't have to wait around for construction to finish on the main resort. The moment you sign the papers, you get the keys to this. A private, 5-acre family ranch near Lake Tahoe that's already been totally renovated. It's an immediate, tangible benefit. And check out how this works. You get a whopping 118 days, that's 17 weeks, of your own personal time at this ranch every single year. The partnership pays for all the upkeep, which is about $50 grand a year.
And if you don't use all your weeks, you can trade them for credits on these exclusive travel networks like Third Home and basically swap your time for stays at thousands of other luxury pads all over the globe. Pretty sweet. Okay, so you've built this incredibly specific high-end offer. The question is, how on earth do you find those two perfect needles in the global haystack? How do you even start the hunt?
Well, you definitely don't take out a Super Bowl ad. The whole strategy is super targeted and, discreet. You go where these people already are. We're talking online professional networks, private directories for family offices, and niche communities. Think about it. Equestrian groups with thousands of members, exclusive clubs for people with over 10 million in net worth, and networks of the very financial advisors who manage their money.
And this is where it gets really interesting for all of us. Because even if you're not in the market for a $5 million resort, the strategy they use to find these investors is a masterclass. It's a playbook that pretty much any of us can learn from. So what does that playbook look like? Well, it boils down to a few key things. First, you build your own audience, your own email list. Then you become the kind of partner other people want to promote by giving them value first. You create something amazing they can share, like a great guide or report. You make it dead simple for them to help you with a little summary sheet. And of course, you have the tech to track what's working.
So here's the big takeaway, right? It doesn't matter if you're selling a resort or a new app. The real secret is to stop thinking about one-off sales and start thinking about building long-term relationships. It's all about building trust and giving away massive value before you ever ask for the sale. The transaction just becomes the natural next step.
So when you peel it all back, this deal is one very specific vision of what legacy means. It's this incredible mix of a real physical place, experiences for your family, and some really sharp financial planning. It kind of makes you stop and think, beyond just the money, what does a true legacy investment really look like to you? What does it mean to build something that's meant to last for generations?